Hey everybody, welcome to episode number 9 of the Real Talk Real Estate Show. We have a beautiful day here in Washington, D.C. Got the entire city in front of me, beautiful views behind me. We're here on the Georgetown waterfront, looking at the Kennedy Center, the Key Bridge, Arlington. So we thought we'd shoot today's episode outside, where I'm going to speak directly to you, my buyer clients, and explain how it's so important to get the financing piece right in your transaction. I'm going to show you exactly how. Washington, D.C. real estate. Fiercely competitive and always changing, where people from all corners of the world come to make their mark. So on this show, we get real. Real about what actually matters, where I show you what's behind the curtain, and you get a new perspective. Because having the knowledge and insight means the difference between winning and losing. Welcome to Real Talk Real Estate. So thanks for checking in. Like I mentioned, on today's episode, we're going to discuss financing as it pertains to being a buyer. On an earlier episode, we talked about how to structure an offer to become the strongest buyer possible, how to be successful. But there's this whole other side, which I think is so misunderstood and under-discussed in my profession. Because think about it, you have two basic things to worry about. Number one is the real estate side, how we put together the offer. That includes negotiations on price, earnest money deposits, inspections, all of that. And as a real estate professional, that's where I'm really involved to get you the best possible deal. But then there's this entirely separate aspect, which is where your lender is going to be incredibly involved with the transaction. And I think that's where buyers tend to stumble, especially first-time buyers. So I want to be candid about a few things because I think it can make a huge impact on your next transaction. So when you're dealing with who you select as a lender, you're going to have a couple things that you as a consumer are going to look for. You're going to have an interest rate, maybe you have a relationship already with a banking institution, which is great. But this is what I'll say, to be completely candid. In a competitive market like Washington, D.C., like Arlington, like Bethesda, and in just many places in our area, in the entire DMV, you're going to be in a situation where you're going to structure an offer to make your financials just as competitive as your offer components. So if we're looking at that, you're going to have an appraisal deadline, you're going to have a financing commitment deadline, all things important to a seller. And if it's competitive, you're going to have to shorten that window of time, which is going to essentially mean two things to you. Number one, your bank's going to have to be really responsive to the deadlines that are in place. Number two, it's going to mean that you have a partner as a lender that's going to work with you every step of the way, not just only to give you a good rate, but to also provide assurances to the selling side that, hey, we're going to meet all of these deadlines, knowing it's competitive, knowing we just shorten those windows of time. So this is me being candid right now. Your big bank is probably going to let you down. They may be your best partner in banking, but I want you to really separate those two things for a second. You have a great bank that you've always used for anything to do with your checking and savings accounts. That's fantastic. But that right there doesn't make them a competitive lender that's going to put you in the best position to succeed. I see it all the time. I work with a lot of sellers too. And you have a big bank like Bank of America or Wells Fargo, they've been in the news, right? And you have to write a contingency period that says we have 2 weeks to get an appraiser out there and complete their report, and you have to have a full financing commitment done in 21 days, 3 weeks. And you could do everything to get them the stuff that they need in a timely manner, but guess what? When you call that 1-800 Wells Fargo number and you just get passed off to some customer service representative and they're not able to work with you and get you the answers that you need, you may run the risk of passing one of those deadlines that we wrote in your offer to get you the property, in which case you could be risking your entire earnest money deposit. You could be compromising the entire transaction. So having like a local lender, someone with knowledge of the area who's able to meet these deadlines may be a very good option, especially in a competitive market situation. Specifically, I use a company, PHH Home Loans. They do a fantastic job when I need something done on a timeline that is competitive. And there's many others like that, tons of them. George Mason Mortgage. I can create an entire list of local lenders that understand our marketplace. But again, what does this mean to you as a borrower? It means that you don't just want to focus on the rate, but again, you want to focus on their ability to perform, because you don't want to lose your earnest money deposit or something else in the transaction that may put you in default. Another thing is, bigger banks' fees, whether it's appraisal fees, closing costs, are typically a lot higher than your local lenders that are, again, trying to be competitive in our marketplace. So you don't just want to look at an interest rate. Yeah, they may be comparable, but look at the entire closing cost sheet, that good faith estimate they provided at the very beginning, and ask yourself, just go line by line, are these fees roughly the same? And you're probably going to find with your bigger banks, those banks that you've banked with for 10, 20, 30 years, they're probably going to let you down there too, or at least there's a chance. I'm not going to say in all cases, but again, you want to look at every element of that. But I stress to you again, when it comes time to secure a loan, expanding your horizons, looking at alternative options, and just having someone local take a look at your overall situation and work with your real estate professional on that. I encourage all of my buyers, the most qualified, the best buyers, all the way down to those first-time buyers. I say just get a second opinion on your situation, because this is really important to get right. So I get a lot of these questions, and I think it's met with mistrust, that somehow your real estate professional is trying to get in the way of your banking relationship. But in reality, my goal always is to put you in a position to be successful. So by expanding your horizons, finding someone that's probably going to cater to whatever we have created in the offer is going to be in your best interest. So that's some straight talk about financing, banking, and ways that you can put yourself as a consumer back in the driver's seat to be competitive in competitive markets, and ultimately get the best rate, the lowest closing cost, and have a successful transaction. So again, if you want to ask us any questions, we're always here. Use the hashtag AskJohnFox. I'll answer any of these questions that you send. But I've had a lot of questions recently about finance, so I thought it was worth making an episode. And if you haven't taken a chance to go back and look at some of the others that I've made for buyers about how to structure your offer, I strongly encourage you to. Put these two together, you will be successful. So until next time, we'll talk again. How long was that?